you know, we're at the Aspen Ideas Festival, right? So there's a lot of ideas being exchanged and a lot of discussions. I mean, I heard some, you and I both heard quite a bit last night among the dinner tables, the discussions about what's going on in Greece, right? And in Puerto Rico. It seems so serene here, but boy, are there some political hot spots in other parts of the world. So what is your sense of how that might hit business confidence?
Well, it's just another one of those uncertainty factors that are out there all over the place. The real question, I think, on Greece and Puerto Rico is everyone wonders whether it's going to have a contagion effect. So Greece and Puerto Rico in isolation, the economic effects are not huge, other than obviously to the populations of both those places. But in Greece, if it signals a broader kind of feeling of the Eurozone crumbling or other bigger issues or other countries having problems, that's where it starts to get really complicated, and there's a political as well as an economic analysis. In the United States and Puerto Rico, if you have them going bankrupt, is there another state right behind it? That's the questions on businesses' minds.
Well, okay, so do you get that sense, though? I mean, let's put Puerto Rico aside, but let's say Greece. Let's say what's going on in Iran and the Middle East. I mean, do you get the sense that this might be the year that it turns for us here?
Well, the different equation we're talking about today with Greece is not the euro crumbling. It's whether we're having a short-term market effect. The political aspects of Greece leaving the euro, let's say, is a longer-term challenge. Is what does that mean for the next country who has problems? I don't think today the sovereign debt is as contagion with the Greek debt. So you're not worried about a falling out effect. I don't think it's as big a deal as it was even a couple of years ago when we talked about it.
How about having a damping effect on M&A?
Well, M&A is for lots of reasons booming, obviously, and that's because of companies trying to find growth, trying to find cost containment, other things like that. It will affect valuation, certainly in the short term, as markets are very volatile, and that does affect deal transactions. But we do something called the Capital Confidence Barometer, where we go out and survey a lot of different companies around the world, and we're at a 5-year high for interest in doing deals. More than 50% of global companies are looking to do deals over the next year.
But do you think 6 months from now you'll still be at that high?
I would think you would, yeah. I think because the deals, what's driving the deals is a search for growth, which will still be there. You're seeing a tremendous movement towards disruption, trying to get business models like cable and telephone together and things like that. Those issues will still be there. I think the confidence is there with regard to trying to find those new opportunities for improvement and growth.
Now, I know you are head of the tax policy committee for the Business Roundtable, right? So you're lobbying for tax reform. Mark, you haven't been successful. There's no corporate tax reform. It's been tabled for so many years. How do you expect you're going to get anything done in the next 12 months?
It's going to be tough, I'll admit. And I was in government for a lot of my career, too. I wasn't terribly successful there either, apparently.
Right. You were in Treasury, right?
I was, yeah. It's a difficult time. We are going to see some real tax activity come fall because the Highway Trust Fund has gone broke, and they need to go ahead and fund that. Both political parties want to extend that for multi-years. We have a real issue with overseas, some $2+ trillion in cash overseas by U.S. business sitting there. So they're trying to marry up a bunch of proposals that will provide for some international reforms, maybe some things that Europe and other countries are doing around patent boxes and knowledge boxes, they call, for lower tax rates on certain types of intangible income, and funding the Highway Trust Fund. That issue is going to come to gel in the fall, and we'll see how that breaks.
In the fall of this year.
Fall of this year.
And you take some heart from us having passed the trade deal? You think the trade bill is in some ways a good sign for what you want to do?
It's a great point, but yeah, it's a canary in the coal mine. At least they've come together and proven they can do something, President and the Republicans in Congress. It took a lot longer than we had hoped, and so they still have to work through the TPP element. They got the TPA, but not the Trans-Pacific Partnership. That will come first. And then they're going to turn to tax. You also have the expiring tax provisions. If they're not extended, that's a $900 billion tax increase on business over the next 10 years.
And before we go, who do you think among the candidates so far is going to be most friendly to business?
That's a hard question. They're just beginning to put their platforms together.
Who do you like?
I like all the candidates.
Oh, okay. Spoken like a true CEO, by the way. You want to put all your bets on everyone.
Well, I'm hopeful that they're going to work with us, whoever they are, and I want to keep those bridges open.
All right, Mark. Great to see you this morning. Thank you.
Thank you, Betty.
Mark Weinberger, the CEO of Ernst Young.